Hello, and once again, welcome to the program, Your Local Government. I'm Bob Miller with Blue Ridge, and this is the show that focuses on government. And today we're taking a little bit of a twist, and we're actually looking at international government issues. A little twist for the show, but always interesting because everything that happens internationally affects us on some level. Our guest is Larry Hagen, been here before. He's a teacher at Effort High School where he teaches economics, well loved by his students for his passion. So thank you again for being here in your summertime off. So thank you for this opportunity, Larry.
Hey, thanks for having me on again.
Today, as I said, we're going to be talking about something that's international. If anybody's been listening to the news, it was recently that there was a lot of discussion of what's called the Brexit, which was Britain exiting from the European Union. And I'm sure some of the people watching this understood what the European was and what they were doing, but some people that probably might need a little history. So if you could, give us some history of, what was the European Union and what was some of the rationale behind creating it?
Yeah, so I'm going to focus on the economics, the economic history of the European Union. And it really starts in, well, first let me back up to say, I think what they were doing is what the whole world was doing, which was trying to open up to more international trade, to more trade between nations. So the whole world was going in this direction following World War II with GATT, the General Agreement on Tariffs and Trade. And so Europe was doing the same thing amongst their, 27 countries or whatever it is. And they started in 1951, I believe was the date, with an agreement about steel and coal, trading steel and coal. And there were maybe 6 countries involved. There might have been Germany, Italy, France, Spain, maybe something along those lines. Mm-hmm. And then that got expanded in I believe it was 57. There was the Treaty of Rome maybe that expanded to what was known as the European Economic Committee, the EEC, or sometimes called the Common Market. Mm-hmm. And this was to open up more trade between the European countries. Great Britain, interestingly enough, was not part of that common market at the beginning. Mm-hmm. Then later they tried to become part of the common market in the early 1960s, and France vetoed it, interestingly enough. So later on, that will then, the EEC, or Common Market, will then expand and become the European Union. I believe that was in the early 90s. And then late 90s, early 2000s, we get the introduction of the euro currency, and then we have the system that exists today.
Sure. Let's talk about the currency. Prior to that, everybody had their own currency, and that must have been quite the transition to go to one currency. Tell us about how that was pulled off.
Yeah, so there was the British pound, there was the German mark, there were all these different currencies, and that created what economists call transaction costs. So if I want to buy something, if I live in Pennsylvania and I want to buy something from somebody in Maryland, it's no problem. We carry out that transaction in dollars. But if I live in France and I want to buy something in Germany, there's a transaction cost to that. I have to go from one currency to another. So the idea is if you have a common currency, you lower that transaction cost, and that encourages more trade. Mm-hmm. But of course, that means then that everybody's got to turn in their marks and so forth, and turn them into euros. Interestingly enough, Great Britain is one of the countries that refused to do this. They held on to the British pound.
Interesting. So that was an option, that you could take on the euro currency or keep your own.
Yeah, I think every other country did, maybe with the exception of Norway. Norway will be an interesting part of this discussion because they, like Great Britain recently, have voted twice to stay outside of the European Union.
Interesting. Now, a lot of people know that the value of dollars compared to other currencies fluctuates. So sometimes the dollar is rising against others, sometimes it's falling, and there's a whole currency market where people will actually, I believe, speculate to try to get profits by catching the proper trend. So each of these countries had their own value to their currency that might have been predicated upon, what they were doing with interest rates, or how much income they had or how much debt they had. So I would imagine prior to the euro they were fluctuating. How did we get it all locked in that there would be a euro that would be tied to their dollars or to their currency?
Yeah, so I don't know all the specifics off the top of my head, but they had to come up with some exchange rates that they were ultimately going to say, this is the fixed rate at which we are going to carry out this transition. So the German mark will have this exchange rate for euros. Here's how many euros we will give you for your German marks. France would have to do this with their currency. Spain would have to do it with their currency. I'm not quite sure how they came up with those numbers, but they would have to come up with those numbers, and then everybody would, trade in your marks for euros, and then once that was over, now marks don't exist anymore.
Sure. Now, once that happened, what were the upside or benefits to that?
So of course the benefit then is this lower transaction cost, which encourages more trade. The negative is what Greece is suffering through right now, is not having control over your currency. So probably what Greece would like to do right now is to inflate their currency in order to deal with some of the excess debt that they have. But they're unable to do that because they don't have their own currency anymore. The currency is the euro, which is controlled by an international body, a European body. So Greece does not have control over that. So that's one of the negatives, is you lose some local power, some local sovereignty.
Let's talk about Greece just a little bit, because I know people was in the news, but what was occurring in their country economically that caused the necessity for them to want to do that?
So, really the short answer is debt. So people living beyond their means and borrowing money to do it, and also the country living beyond its means, the government living beyond its means, accumulating a lot of debt. And that's ultimately is really the foundation of the crisis.
Sure.
Now, the interesting connection to all of this is to the international trade, is that some economists argue that the current trade systems that exist, opening up to international trade, creates tremendous benefits and wealth, but there are also some workers that get left behind, jobs that go overseas and so forth. And those workers were not, some economists argue, were not adequately compensated for their loss of those jobs. So now what do these people do that lost those jobs? They begin borrowing in order to try to keep up the lifestyle that they had before.
Gotcha.
And so this drives up debt levels and creates many of the problems that we saw in 2009.
Sure. Let's go back to Greece. There was bailouts that were, negotiated. I believe Germany was involved in some of those, where they were bailing them out, and there was austerity that I believe went with that, and there's a lot of pushback on that. So how did a country like Germany, or maybe Brussels or others, have that leverage to tell Greece what to do, and why did that create such resentment?
Well, so I think Germany has that leverage because their economy is so large. They are economically a powerhouse in Europe, but also they are net lenders to the rest of the world. And Greece, they are net borrowers from the rest of the world. So when you're a lender, you're in a much stronger position than when you're a borrower. So Germany says, okay, Greece, we'll bail you out, but if we do, then you have to get control of your finances. And so, then from Greece's point, well, who are you to tell us to cut our pensions and so forth? And so that's this conflict that you get within the European Union, where you have different countries that are in need of different policies or desire different policies, but they don't have that option.
Sure. So that's why we saw the demonstrations in Greece, and that's why we saw people wanting to leave, because despite the debt, they wanted to not have to make the probably needed sacrifice to bail themselves out.
Yes, that's exactly right.
Exactly. Okay, it's time for a break. We'll be right back after these few words. Stay with us. And welcome back to the program, Your Local Government, taking a little bit of a different twist today as we look at international government issues. But as we said at the top of the show, everything that happens in the world affects us here. And our guest, Larry Hagen, teaches economics at Ephrata High School and also at Hagen. And again, thank you for being with us. We were talking about the European Union and then what is called the Brexit, where Britain wanted to exit. So before we talk about why it did it and what might be the consequences, let's go back to the discontent. Obviously, they didn't decide this very quickly. This was brewing for quite some time. So why was there discontent in England over the EU?
So to talk about the discontent, let's also look at the other side, which are the benefits of trade, which we kind of got into a little bit. So I think when you talk about openness, greater integration between countries, greater trade between countries, there's tremendous benefits. It has made us in the United States relatively wealthy. It has made the Europeans relatively wealthy. China and India more recently have been enjoying increases in wealth and incomes because of international trade. So there's tremendous benefits for mankind from trading with each other. But on the negative side, as we mentioned before, some people get left behind. And it's not their fault. They haven't done anything wrong. They're in an industry, they're doing their job, they have some skill, and now that industry moves overseas, and all of a sudden they find that their skills are no longer desired in the workplace, they're unemployed, they begin borrowing, they go into debt, and this creates income inequality. And then that group over, now I'd say this lasts long periods of time because they can use debt for a long time to satisfy their desires in terms of their lifestyle. Once that comes to an end, the debt crisis in 2009, now it's hard to use debt to satisfy that lifestyle. So as a result, you get this income inequality over long periods of time, and you get political coalitions to start to form to oppose this international trade. And I think that's the foundation for a lot of the discontent, that inequality. There's people who feel like they've been left behind, and they have a point, I think.
Sure. So are you saying that England may have had a higher wage in some industries, and as you got trade, those other parts of the EU that might have done it for less and the jobs moved there? Is that
Sure, yeah. So I think there would be jobs that would have moved overseas and to different parts of Europe, to Eastern Europe, and then even if you think about the world, to China or India or wherever, and those people are left behind. That increases inequality, and they create a political coalition that says we don't want to be part of this anymore.
Who was the driving force behind this? Would you say this came from the laborers, or was this being pushed at the top by the banks, the big money, or was it a combination of
So I think the banks or the big money would be, interestingly enough, opposed to the Brexit. This puts London in a very difficult situation because there's a lot of money and a lot of very wealthy banks and bankers in London, and this is going to threaten their ability to carry out international transactions with Europe. So I think they definitely would have been opposed to this.
It seemed to be, and even Barack Obama lobbied England to stay in, saying there'd be consequences for leaving.
Yeah, and I agree, and I think again the benefits of the trade outweighs the cost, but it is forcing the world to begin to ask ourselves, how are we going to compensate or deal with the fact that some people are legitimately left behind? What are we going to do about that? And this puts that at the forefront.
Sure, and just the whole process. This was, I believe, put on a ballot that people voted on it.
Yes, correct.
And if I remember from the news properly, there was some thought that it wouldn't pass, and it was somewhat surprising that it did.
Yes, I was very surprised actually. I followed, there's a website called Predict It, and it's a website where people can buy and sell shares on world events happening. So it's kind of a market prediction. And the market was predicting there was about, I think it might have been like a 30% chance of Great Britain exiting the day of the vote. And then of course that turned out to be completely wrong. So I think it surprised these bettors, it surprised the stock markets. The stock market actually was up the day of the vote, and then of course following that the futures markets began to fall. So I think most people were surprised. I think there was an expectation that they would not leave.
Sure, and if you look at it demographically, London was very much in favor in that whole of staying, and it was the rural areas that were interested in leaving. Does that tie to your theory that those that are involved in banking wanted to be there, and those who may have been lost in all of this in the rural areas were anxious to deal?
Yes, I think that very much does tie in. People who have these skills that are desired on international markets, they benefit tremendously from this open trade. People whose skills do not translate into that type of environment, they suffer and potentially get left behind. So that is about what I would expect.
Sure. In watching the newscast, you almost saw that part of it, though, was pride in just being independent, that we are British. And do you think that played into it as well, that they felt lost in a common market, so to speak, and wanted to maintain some of their own identity?
Yes, I agree. So I'm focusing on the economics. That's my degree, that's my area of expertise. But I do agree, there are other things going on in the world that affects all of this. There's religion, there's cultural pride, national pride, all those kinds of things. I think they matter too.
Sure. One of the concerns was that some of the control was in Brussels, and people were not happy that another country was calling more of the shots. Any thoughts on that perhaps Brussels had too much control and they didn't allow enough input from Britain? It would have been different if there would have been more shared input on decision making?
Sure, and I think this is a common problem anytime that you have some large political institution, be it China, the United States, the European Union. You're going to have struggles between the central government and the local governments. In this case, between the European Union and Great Britain. But you can also see it here in the United States between, governors, the governor of Texas and Washington, D.C. I mean, there's going to be conflict between, there's going to be power struggles there.
Okay. Let's talk about banking a little bit. You said this could be impacting the banks. Will be people less likely to make deposits or make loans from those banks, or maybe it's too early to know. Any thoughts economically how the banks will be impacted by this Brexit?
Yeah, I think really it depends whether or not there's, to use the language I'm starting to see in the literature, whether there's a soft Brexit or a hard Brexit. So a hard Brexit would be a hard separation between Great Britain and the European Union. And under those conditions, there's a significant barriers to carrying out transactions, financial transactions between England and the continent. That would be a big problem for London. If, on the other hand, they end up with a soft Brexit, in which case this all becomes kind of a lot of fanfare for nothing, where, after all this happens, they just form a new treaty with the European Union, and it's almost like it was before, then I think banking probably doesn't suffer all that much. So I think the devil's going to be in the details, and it's going to be weeks, maybe months, until all of this plays out.
Sure.
Maybe years.
Sure. And of course, the Prime Minister has now resigned. The Queen accepted his resignation.
Yes,
That's all.
right.
How do you think that will change? I mean, it looks as though the successor has been chosen. Any thoughts as to whether they're leaning towards soft or hard Brexit?
Yeah, so I was just reading about that this afternoon, and it's kind of hard to get a feel for her. She in the past has shown some desire to slow down immigration, to slow down trade, but she also seems to be very practical. So it's going to be interesting to see which side she takes.
Sure. Be interesting to see if similarities to Margaret Thatcher or not.
Yes, right.
Okay. All right, it's time for a break. We'll be right back after these few words. Stay with us. And welcome back to the final segment of Your Local Government, a fascinating show as we're going to international affairs. Our guest is Larry Hagen, who teaches economics at Efford High School and at Hack. Our subject has been the Brexit, and even though it's across the pond, as they say, it will have some impact upon us. So let's get right into that. How could the impact of the Brexit actually affect the U.S. economy?
So I think we saw this on the day of the vote, or the evening after the vote, with the reaction in the stock market in the United States. So if this turns out to be the beginning of a trend, other countries begin to leave as well. France leaves the European Union, Spain leaves the European Union, and international trade begins to break down, then I think that is very damaging for the United States economy. Now, if this is just one example of what's happening in the world, Great Britain leaves, that's it doesn't spread to other nations around the world, then it may turn out to be not all that big of a deal. So if you look at the stock market, originally there was a lot of fear, and the United States stock market declined significantly. But all of that has been made up, and we're now at new all-time record highs. So I think even the traders are trying to figure out what does this mean for the future.
Any thought? I mean, it's rather predictive, and when it comes to the stock market, that's about next to impossible. But any predictive what the fear was that the Brexit, how would that impact the United States?
So I think it would be the breakdown of international trade. I think that would be the fear. And we could go back historically to, for example, the Smoot-Hawley tariff in the 1930s, shut down international trade and helped contribute to the Great Depression. So if you shut down international trade, I mean, Europeans buy a lot of goods from the United States, and that hurts our economy if they stop buying our goods. So we are in an integrated world, and when an area as large as the European Union, if it would begin to fall apart and shut down international trade, that's going to hurt a lot of jobs and a lot of companies in the United States.
Sure. Let's delve into that just a little bit more. In the early discussion, we talked about the common market. It was more easily for them to trade among each other. How does that impact the United States? I mean, does the European Union buy for the whole union, or are we still trading with countries individually? And help us understand that whole mix there.
Yeah, so really, as an economist, I use this language, and we all use this language, but I think it's incorrect. It's not so much that the United States buys from Britain. It's an American citizen buys a good from a British company. That's really what's happening. What countries are doing is they are lowering the barriers to those trades. So I want to buy a car that is made in Germany. If there's big barriers put up by the governments, then we cannot engage in that trade. Now, the common market, by opening up to trade within Europe, that makes Europeans wealthier. And then as a result of that, they will buy more of our goods. So I think we are very much the benefit of the existence of that common market. And I think we would suffer if that common market goes away.
Gotcha. So, how do you think this is going to impact the remaining countries in the EU, those that decide to stay?
So again, if it's a hard break where British leaves and there's a lot of animosity, then I think there's going to be pressure on others to consider doing that as well. If it ends up being a soft break and the British end up more like what Norway has with the European Union, they're not part of the European Union, but they still trade with them, not very much changes, then I think it probably is not too big of a deal. Hard to know how that's going to play out. We really don't know how this has really played out yet.
Sure. And we haven't heard much about Greece. I mean, the thing about debt is that you can placate it for a little while and then it comes back again. We haven't heard much about them, but have you seen anything economically that some of the stopgaps are now running out and there's another crisis brewing and could raise that whole specter once again?
Yeah, so I think they've dealt with symptoms, but they have not dealt with fundamental causes. So I think that the problem in Greece is going to rise again, and it's going to rise in other places as well. Italy is the most recent right now. Their banks are in trouble. They've made a lot of bad loans. Again, it comes down to this debt problem. So Italy's going to be the next place, and Italy has got to be figured out as the same way as Greece was figured out. And I think to a great extent, the European Union is making the choice of dealing with symptoms rather than dealing with fundamental problems. And sooner or later, they have to deal with the fundamental problems.
Politicians seem to be very good at kicking the can down the road, don't they?
This is well said.
As we've spoken on this show many times with the pension crisis in Pennsylvania, we just keep kicking it down the road and hoping that it'll go away, and it never does.
Someday you have to deal with it for real.
Yes, and I believe Portugal is in not too good economic shape, I believe, either. I've read an article on that one.
Yeah, so the countries along the borders of the European Union seem to be the ones that are suffering the most. Portugal, Italy, Greece, Spain to some extent. Those are the countries that are in more difficult positions than, say, France, Germany, etc.
Sure. And it appears as though Germany is the powerhouse that's been bailing. And from what I understand, many of the citizens in Germany are getting tired of that. As a matter of fact, I believe Merkel has lost some popularity because of her willingness to wanting to be helping everybody out. At what point does there become a revolt in Germany? It's like we're tired of being the bankroll to everybody. I remember, Greece saying that, Germany's rich, they should be helping us out, and the Germans are saying, like, why?
Right.
We work hard, we're thrifty.
We're rich for a reason.
We're rich for a reason. Why should we bail you? And it becomes resentment. And any feel of where Germany is on reaching its tolerance of bailing out?
Yeah, I think they're in a really tough spot because if they bail out, then they continue to send their the money that they've worked hard to save to Greece and other countries. But if they don't bail them out and those countries leave the European Union, their economies collapse, then they don't buy German goods. So I don't know what to tell the Germans to do. It seems that they're stuck one way or the other.
Sure. Are you seeing anything that there's soon going to be an uprising among Germans against Merkel and her policies, or do you think that'll sustain for a while?
So I'm not sure. I haven't seen anything in what I read, but again, there are England and Greece and Italy. They've been stealing the headlines right now.
Sure. And from what we're able to understand, is the German economy still nice and strong?
Sure. I mean, from what I've seen.
Okay. I just heard recently that one of the German banks was having reserves of less than 3%. That was getting a little bit disconcerting. And but I imagine they still have the wherewithal to handle a little bump in the road if there is one.
Yeah, sure. So for them, if you look at the banks that have made bad loans as a percentage of their entire economy, there's some that have, but they're relatively small as a percentage of the economy, whereas Italy and Greece, they're really, really large as a percentage of the economy.
Sure. We have 30 seconds, real quick. Expected future trends as a result of this, in 30 seconds.
Yeah, so, well, it depends whether this becomes a soft or hard exit by the British. Do they work things out with the European Union, or is there animosity between the two? Sure. I think ultimately we have to be careful not to kill the goose that laid the golden egg. We have to somehow save international trade while compensating these people that suffer in the meantime.
Absolutely. Very well said, Larry. Thank you so much. I hope we can have you again to talk about a similar subject. And that's going to do it for this program. Join us again next time to learn about your local government.